Stocks to buy now in 2021. Insane growth. Hello guys, welcome back to Stacking Stocks, and many thanks for joining us today. As usual, we've prepared some wonderful content for you. Did you join us for our previous session of new Bitcoin price predictions in 2021? We're going to have a quick recap before we kick off today's topic. Let's look at what a section of cryptocurrency analysts and key retail investors had to say about the Bitcoin price. During our previous session, we highlighted several comments from key cryptocurrency stakeholders. Most of them predicted the Bitcoin price to skyrocket to $60,000 and above in 2021. Well, we're yet to witness it. Do you think it'll happen? To find out more about new Bitcoin price predictions in 2021, watch our previous video. Are you a Bitcoin trader or investor? You definitely would want to watch that video. You're probably wondering why we've taken some time recapping our previous session. The idea is to have all of you, especially those who missed that session, keeping up with our content. Now let's move on to today's headlines. Stock that you can buy now in 2021. Let's begin with Ryman Hospitality Properties Incorporated. Ryman Hospitality Properties is a company that operates from Tennessee as a hospitality real estate investment trust. Well, if you're from Tennessee, you might have heard of it. But can we say the same about those who don't hail from around there? Well, we can never be certain. What we do know, however, is that Ryman Hospitality Properties has portrayed a lot of potential in the stock market. According to the latest data, AMCO investors owned 1.4 million shares in the firm at the end of June 2021. Do you know the worth of such an amount of shares? The shares were worth $114 million and were approximately just 0.97% of the portfolio. Investment advisor Deutsche Bank maintained a buy rating on Ryman Hospitality Properties stock and raised the price target from $88 to $95 a share on August the 5th. Wow! Furthermore, there were 22 hedge funds in the database of Insider Monkey that held stakes worth $342 million in Ryman Hospitality Properties at the end of the second quarter of 2021. As you can see, we're talking about huge amounts of money. In the first quarter, the stakes by the 22 hedge funds were worth $356 million. Don't you think Ryman Hospitality Properties is worth every single dime you invest in it? For quarter 3 and quarter 4 of 2020, we're going to analyze an investment letter for Buyer Me Capital. Here's a brief outline of what the fund said. In quarter 3, we purchased shares of Ryman Hospitality Properties, or RHP, another company whose business and stock price were temporarily crushed by the pandemic. Ryman is an owner of large, convention-focused hotels under the Gaylord banner. Before 2020, the company had grown EBITDA every year since 2012 and has a demonstrated ability to profitably develop new hotels from scratch, having opened 5 since 2000. These hotels dominate their niche in the conference and convention segment. They have more meeting space square footage than almost all of their competitors. Ryman also operates a fast-growing music venue business, including the Ryman Auditorium, the Grand Ole Opry, and a chain of bar and concert venues called Ole Red. These comprise RHP's entertainment segment, which grew EBITDA from $14.5 million in 2011 to $58 million in 2019, an 18% CAGR. We think the company will do more than $300 million of free cash flow in 2022. When we were buying RHP at the end of quarter 3, it had a market cap of $2 billion, a mere 6 times multiple of FCF. While the market cap has recently increased to $3.7 billion, we still find the valuation very attractive for a company with their track record. The figures are quite attractive. Maybe you should consider buying shares in Ryman Hospitality Properties Incorporated. The information we've outlined concerning Ryman Hospitality Properties is quite extensive, and you should be able to know whether or not it's a worthy investment. Let's move on to the next stock with massive potential in 2021. The next stock we have is Charter Communications Incorporated. Charter Communications Incorporated is a Connecticut-based company that markets broadband and cable services. Have you heard of it? If you're from Connecticut, then you might have. Warren Buffett's Berkshire Hathaway owned 5.2 million shares in the company, worth $3.7 billion at the end of June. The latter represents 1.28% of the investment portfolio of the company. We're talking some huge numbers here. Wouldn't you consider buying shares from this company? Investment advisor Argus maintained a buy rating on Charter Communications stock and raised the price target from $775 to an amazing $900. That's a massive increase, especially if you're a heavy investor. To what does Charter Communications owe this much success? After upgrading its network, the firm gained high-speed internet and wireless subscribers. According to Insider Monkey, the 75 hedge funds held stakes worth $19 billion in Charter Communications at the end of the second quarter of 2021. Can you imagine that? Furthermore, that was an increase from the previous quarter, which was $16 billion. ClearBridge Investments commented on Charter Communications stock through its Quarter 1 2021 investment letter. And what did the asset management firm have to say? Here's what the fund said. The portfolio's quality bias and valuation discipline have generated compelling returns over time with typically strong relative results in more challenging environments, as it did through the first 3 quarters of 2020. However, that same quality bias tends to create a more challenging relative performance environment for the strategy during periods of sharp economic acceleration, which tend to benefit stocks that are more commodity-linked or of lower quality. This has been the case during the vaccine and stimulus-driven rally experienced late last year and during the most recent quarter. Sectors that lagged in the quarter included communication services, where Charter trailed after generating robust returns earlier in the recovery. As you can see, Charter Communications has been posting attractive figures. Would you consider buying their shares? Well, we're here to guide you regardless of your choice of stock investments. Another stock that you should consider buying is U.S. Bancorp. U.S. Bancorp operates from Minnesota and offers financial services. According to regulatory findings, Berkshire Hathaway owned more than 128 million shares of the finance firm worth $7.3 billion at the end of June 2021. What a huge amount of money! Furthermore, Insider Monkey reports that the 41 hedge funds held stakes worth $8.3 billion in U.S. Bancorp at the end of the second quarter of 2021. If you're an investor looking for successful company stocks, you should consider U.S. Bancorp. Mayers and Power commented on U.S. Bancorp stock through its Quarter 4 2020 investor letter. Here's what the fund said. On the negative side, one of the fund's biggest detractors in 2020 was U.S. Bancorp, or USB. Like all banks, U.S. Bank was hurt by the difficult interest rate environment and credit cycle concerns. We believe banks are strong enough to survive the current sector doldrums, and they remain some of the market's most attractive opportunities. U.S. Bancorp has attractive figures, and you can buy their shares. Now, our final stock in today's guide is CNH Industrial NV. CNH Industrial is a firm based in the United Kingdom that sells construction and agricultural equipment. According to the latest data, GAMCO investors owned approximately 10 million shares in the company worth $166 million at the end of June 2021. That's not even the end of it. The leading shareholder in CNH Industrial NV owns 134 million shares worth more than $2.2 billion. Wow! Imagine being the leading shareholder. This is what Longleaf Partners Fund, an asset management firm, had to say in its Quarter 1 2021 investor letter. CNH Industrial, or CNH, one of the world's largest agriculture machinery manufacturers, was another top contributor. CNH reported strong fourth quarter results, beating the consensus on every metric. The agricultural equipment business, which represents the majority of our value, posted a strong top-line growth of 19% year-on-year, thanks to rising commodity prices, growing trade with China, and replacing aging machinery fleets. Visibility for the first half of 2021 is strong, given solid ag order growth across most key end markets, and we expect to see an operational turnaround in CNH's other businesses. Can you notice the potential that this company has? Well, we've done our part, which is to guide you. Nonetheless, it's one of the stocks you should consider buying. Well, I'm sorry to say that this is the end of our session today. Once again, thank you so much for tuning in to Stacking Stocks today. Remember to subscribe, like, and share.